Hello and welcome to today's Decent Trader Technical Analysis Education. Today we're going to be talking about constructing a chart. So the objective of today is to establish a very clear framework which can be applied to any chart or asset, equity, foreign currency pair, and we're going to use that to aid our trading or investment decision making. So today we're going to cover setting up a chart from a cold start, key price levels of interest, basic support and resistance, so determining if we're in a trending market or in a ranging market. We're going to look at basic moving averages as well. What we're not going to cover is an in-depth discussion about indicators or chart patterns specifically. We will discuss those on a second follow-up part of the series. It's an extremely lengthy process. Today is all about setting up a chart and trying to understand how to use it with investment decision making. The method we're going to use is that we're going to go through some brief lecture style slides, and then we're going to go through a practical charting example, building a chart from scratch. Then at the end we're going to do a recap as to what it is that we've discussed. Let's get into it. Why spend time assessing a chart? It's quite simple really. We want to assess key areas that price might gravitate towards. So what this will do is this will allow us to assess whether or not it's a good time to enter the market. Is it a risky time to enter the market, or is it a good time to enter the market? Is the price high or low relative to the past of this asset? And then also, where's going to be a good place to exit this? What should we set as our profit objectives? And on that basis, it should aid us in understanding what's going on with the asset. Do we want to buy the asset now? Do we want to sell the asset now? So can you predict the future with a chart? A chart is a history of what's happened with the asset over of price and time. And what I like to think of it is it's like a compass. You have a good idea. You've got a compass and a map of the history. You've got a history book, and you can sort of see using your compass and your history book what might happen in the future. People tend to behave similarly in the future based upon what's happened in the past. Humans work that way, and this is the output of how humans typically think and behave. So it is not a prophetic charting tool by nature. It's not going to tell you the future, although it can be made to look as though that you know what the future is going to be because you've done a good analysis of how the asset behaves. So where we're going to do the chart building and creation, we're going to use TradingView for that today. However, this isn't the only charting software out there, and there's lots of different ones. They all work exactly the same. So the components of a naked chart. So a chart is just basically a graph with an X and a Y axis. On the X axis you have time, and on the Y axis you have price. So the X axis, if you select a 1-day chart as an example, each plot on the Y axis or the data point will be for 1 day of that asset's history. So whatever happened on that day goes along the x-axis. Similarly, that if you choose a 4-hour chart, it'll be on the 4-hour and so on. So in terms of selecting the time frame that you want, that should be based upon how long or whatever the investment or trade time horizon is. So if you're wanting to be in and out of the market on a day, a number of hours, you should be looking at number of minutes or hours as your go-to chart that you want to use. However, as we know, the chart can be useful, or we know that charts will gravitate towards what's happened historically over differing months or weeks, and so therefore it's useful to also review the higher time frames as they can influence lower time frame price action. So if over a number of years or months the price of the asset has failed to get above a certain price point, and on the 30-minute chart you're at that price point, well, that's obviously going to be useful information. So you should get a gauge as to what's occurred in the past whenever you're looking at a chart. So the second component, which we've mentioned, is price, and that's on the y-axis. Literally, this is the one that most people are interested in. Obviously, you've got to buy it at a particular price, and you're going to sell it at a particular price. So that's the most important thing that people are interested in. There's several ways of looking at price over time, in terms of how the chart looks and feels. The two most typical ones are candlestick charts and line charts. And today we're just going to look at candlestick charts. And there's lots of other ones out there like Heikin-Ashi charts and point and figure charts and stuff like that. But we're going to focus on the candlestick and line charts today. So candlestick chart, what does that do? So you get, well, you can clearly see why it's called a candlestick chart. It looks like a candle. And you get a separate candle for each time tick on the x-axis. So T1 and T2 here, you can replace with D1, D2, or whatever. So on the daily chart here, we have day 1 and day 2. So what happened at the start of the day? We have an opening price, which will typically be the bottom of the candle. Well, it is the bottom of the candle, I should say. And then you'll have a closing price, which will be the top of the candle, or the bottom, depending on whether it's up or down. So in this example, obviously the price is opened here and closed here. It's resulted in a green candle, price has gone up. However, we also have daily high prices and daily low prices. So within the day, the price is ranged as high as the wick up here and as low as the wick down here. It's rare that an asset just directionally goes one way with no overrun and highs and lows. So we have these wicks. Now on day 2 here, the day is opened at the previous day's close, and the candle's red, so we know that the price has gone down, and it's closed here, but it's also traded lower down to the previous day's open, and then it's obviously bounced back up and closed here. There's no wick above this. This is an unusual situation. The asset's literally just opened and sold straight off. So key watch outs here, a long wick. So if this wick was really long to the downside, what that might indicate is that price has been rejected in that price range. So that might be useful looking forwards. If price is gravitating towards there, previously that it just rejected it. So it might mean that price isn't going to want to hang around there for very long. And also if there's any small bodies with some wicks either side, that can often mean that price is just indecisive as to where it wants to go. Ultimately something will follow that, normally quite a bigger move, quite a sizable move. What we also have is a line chart. So line chart plots the close to the close. So in this example we would just simply have a straight line close to close. We'll miss out everything else that occurred in between. Obviously that can appear to be less useful because it means that you don't get to see what occurred, what the range of the price was. However, it also eliminates a lot of the noise, and it also allows you to assist with things like trend analysis and assessing the trend that the asset might be having without confusion of all these wicks, which can be just short time frame noise. So let's consider a scenario before we jump into the charts. Let's say that you've heard about Bitcoin and you're interested in acquiring this asset, so you want to buy it. So you want to assess it both as an investment opportunity, but you might also want to trade it as well. So without further ado, let's have a look at the charts themselves. So what we have here is the TradingView tool. So you can select your ticker up in the corner here. So you just type in Bitcoin or whatever and it'll bring up the different options that you can select. In this example, I'm using the Brave New Coin Liquid Index for Bitcoin. When you normally arrive at a chart, it will look something like this. Well, it won't look potentially quite like this, but it will normally be on a linear scale. So you can change the scale, start using the right click down the right hand side, or whichever side you've got your scale on. You might also have it on the left hand side. But here I've got it on a regular scale. And what can you say about this? Well, it looks like price has effectively done nothing, and then it's just gone ballistic up to 20,000 and then back to 3,000, which is obviously a huge amount of range, and then it's sort of done a little bit in between and doesn't really know what it's doing. We can also say that the asset's been around for around 10 years or so. So it's not got a huge price history. A decade's not too bad. But what we can also say is, what's happened in between we can't really see. So we could scroll back through time. What we find is that actually there's been similar sized moves along the way relatively when price was low. And that's just not borne out in this chart. It's difficult to sort of say, is there a trend going on here? So what we really need to do is on a new asset like this, or even any asset looking over time where the price has started low and it's gone relatively high, it's going to be useful to look at a logarithmic chart, and that adjusts the scale from being linear to one that multiplies up. So it makes sense, that the chart, when it was down here at virtually nothing, it shows the relative size of the moves when they've gone up to the upside. So just to note, there's a few tools down the side here. We've got trend lines and tools that help us with assessing trends. And then there's all these other indicators and things here. So we're going to ignore most of the other stuff. We're going to be focusing on these drawing tools. So you've got your painting tools here as well. So what can we say about the asset? So normally what you want to do is you want to try and assess, is the asset moving up? Is it trending to the upside, or is it ranging and going sideways? So what are the components of a trending asset? So a trending asset might be moving up like this. And what you might see is a period of highs and lows where the highs are making higher highs like so, and the lows are making higher lows as they go. So what we describe this as a trending market to the upside. What we might also see is a ranging market where price is just simply going sideways. So price will be going sideways rather than directionally upwards. Ideally, we'll see something like 2 or 3 touches along the price. Well, sorry, 3 touches or more along the price range, which will help us, identify an actual trend, because 2 points don't really, count for too much. A 3rd point and more is probably more useful. So we've got trending, we've got ranging. So what can we say about Bitcoin here? Well, clearly we've got periods of higher highs, and we've got periods of higher lows as well. So I think it's fair to say over time, Bitcoin is trending to the upside. What else can we observe? Well, it's not just continually going straight up. It's also not going in a straight line like this, mainly because we've got, well, not because of, but we have this on a logarithmic chart. So what that does is it makes everything relative. So what we can say is that actually what might be more useful than using a straight line on a logarithmic chart looking for a trend, actually a curved line is more useful. And over time here, we can say this average logarithmic price going through this asset. What I'm going to also do is I'm going to remove stuff as we go that I don't really need, and that's going to be a common theme. Cluttered charts are not really a good thing. We want to eliminate the stuff that adds no real value. We've already established now that we're in a trending market, so let's get rid of that stuff. Now in this example, if I did the average, it would look like this. It's going through the middle of the trend, so that's what we've effectively done here. But what we also want to have a look is the bottom of the range that this thing's been going through. So we've clearly got a trend here over time with this asset. So that's the lows in that. And we'll just put the highs in as well. So I think it's fair to assume that on the basis of the history here that price, is likely to trade somewhere up in this price range moving forwards. Now, what else can we say here? What else can we make an assessment? There's clearly periods of big booms and then big busts. So here the price went up to just over $1,000 and it lost about 80% of its value back to $200. Here we went up to $30 and it lost it all the way back to about $3. Here 20,000 back to like 3,000. So we know that the history is that there's big periods of boom and busts. Now, if you understand Bitcoin and you know what goes on, there is arguably reasons why that occurs, but we don't really need to know that to be able to produce a chart that makes sense. I will say, however, the more that you understand about the fundamentals of a chart, the more you can give gravitas towards the output of your chart. You can explain what's occurring, and if you come up with a theory with what's going to happen in the future, it's more likely, you may be able to put more meat on the bones as to whether or not that theory is likely to come true or not. So it's useful to understand the fundamentals as well, but it's not essential when you're building a chart and looking at trend analysis. So what else can we say here? Is it always going straight up? Well, no, it's not. We're getting quite long periods here where we go sideways. So what we might say is actually this asset is generally doing a trend to the upside. However, we're getting periods of ranging going on as well. What you'd probably say here is that we're in one of those periods of sideways, of ranging at the moment. So Bitcoin effectively has these really big parabolic growths here coming out of these consolidation or ranging periods in the market. So we may as well put those on as well. These parabolic curves to the upside seem to be of importance here. So what else can we say? Well, looking at all of this stuff here, you might say that based upon this, we might get another parabolic run to the upside. So that's going to be our basic theory. So what the key things are here? We look for ranging, we look for trending. Ranging just being price going sideways or consolidating, trending being price going to the upside. Importantly, clearly within a ranging market, you can have trends like this. And obviously within a trending market, you can have periods where the price goes sideways and consolidates as well. So it really depends upon the time frame that you're looking at. But on the highest time frame here on the monthly that we're prepared to look at, it's fair to say that we're trending with periods of consolidation. We've made the assessment that there appears to be boom and bust cycles. And at the moment, we look as though we might be moving towards a period of boom. So the expectation is that we may boom to the upside. However, we don't know whether that is or is not going to be the case. But what else have we not got on this chart? We don't have any moving averages. So what is a moving average? And a moving average effectively will look at the average price for the given length of time that you want the average to look at. So I like to use the 200 moving average as my go-to. What that will do, if you change the price to a monthly chart, it'll look at the 200 month. If you look at the weekly chart, it'll look at the 200 week. So you can select the 200 and it will plot the 200 periods. Now, this is the monthly chart. You can't see it on this chart, but if we go down to the weekly chart, it will plot the 200 week moving average. So what can we say about the 200 week moving average on the weekly chart? Well, what we can say is that it seems to pick up the bottom of the market. So we know that this is going to be an important part, potentially, of assessment of this asset. Generally speaking, if a moving average is moving up, then it means the asset is trending to the upside. If it's moving down, the asset is trending to the downside. So this is supporting our theory here that this asset's moving to the upside, because clearly the moving average, or long-term moving average, is moving to the upside. So what, it's all very well talking about this stuff, and you might say, this is just hindsight analysis. So what I'm going to do is I'm going to show how I've applied this in the past. So here are a chart from May 2017 on May the 13th. And clearly I made similar sort of assessment here. This is really before people started doing these parabolic trends, which has become very popular in the space for the reasons obvious, which is that there is a parabolic trend there. But obviously we hadn't had that other cycle yet. So I'd made this assessment that we're going through bull, bear cycles, consolidation, and is it going to repeat or not? And I promote very much doing this stuff, putting charts, posting them on TradingView. You'll get feedback whether or not it's a good or a bad chart, and that's very much a good way to learn. Actually, you can go read what I put back at the time. But what the theory was there was going to be another cycle, and if you press and we'd set those boundaries, haven't we? So we had the lows and the highs, and if you press the play button, we did get that cyclical repetition. And the top of the trend was obviously useful because price gravitated towards it. And then in this cycle, price has come back and tested the bottom of the channel. So clearly, there's merit in doing this sort of stuff. What we hadn't really observed on here was this parabolic part. So as time went on, we were already moving up. The price had sort of got into this parabolic phase. We were at $11,000. The time was December the 4th, 2017. Now clearly we'd already established this upper parabolic trend, and the price was just going up and up and up, and there was no clue as to where the price might end. However, because of a useful chart, we knew that it was probably going to end around 20,000, which is what happened, and then indeed we returned to the mean here, which was obviously quite useful. And then thirdly, continuation over time, looking at this asset. Obviously, we knew we'd had the previous parabolic run. We're coming up with the idea, obviously, that we're going to have another parabolic run again. We've got our 200-day moving average in there. At this point, the price hadn't gravitated back to there, but we knew last time that it had. So we're on this downtrend here, similar to what we had last time. We actually have some moving averages on here, but we'll just ignore those for now. So we knew that price gravitated down to the 200-day, consolidated and broke out, and then began a new parabolic phase. So again, price went all the way down, it met this moving average, and then the theory is that we're beginning another parabolic phase. I actually gave two parabolic outcomes there. The first of which, obviously, at this point, I thought we were following. But actually it's looking more like the sort of second scenario may take place. The reason why I actually thought that the parabolic phase might happen a bit sooner was just that I had the view that the price of the asset might get a little bit more efficient, in that the market understands these cyclical phases, and therefore the price would just sort of get there a little bit quicker. But clearly, evidently that hasn't happened. So it looks more like we're going to be going along path B. And just to point out, it's very difficult. Obviously we got this bit really right, but it's very difficult to work out on a logarithmic chart where the terminal price should be, because obviously if you going sideways and up here means that the price sort of ticks from, let's say the top here is like 160,000. As you just move the slider along very slightly, you're very quickly at 200,000. So the margin for error here is large. So I'm not hopeful for getting it anything other than potentially nearly right in an ideal world. So hopefully that gives you an idea of how powerful this stuff can be if you get a long-term chart right. So in this example that we're talking about, we are a trader investor. We're looking to get into the market because we believe that this is what's going to happen. We think the price is, going to go up on this parabolic run, and it's going to be up here, up towards 100,000 by 2022, 2023, 2024. Obviously, we haven't spent too much time on this, so it is what it is so far. Now, if we just remove some of the stuff here that we're not going to need, so as a reminder, this was the trending stuff. Trending can occur within consolidation or this sideways market. So let's just get rid of that. We also know that we've got these periods of consolidation or ranging going on in the market as well. So let's get rid of that for now because we know what those things are. We know that we're currently in this ranging period, but we don't really need to continually have that box there, so we're going to get rid of it. We don't really need to look at these previous parabolas, so we're going to get rid of those as well. We also know that this is going to be largely an arbitrary thing until you can get to the point where you can actually draw it. We know that it's there, but we don't need it for today. So we're back to the weekly chart here. However, we know that we're in this sideways consolidation. And really what we want to do is try and understand, while we're going sideways here, what are the important points that we want to look at? What are the important prices? Where's price gravitated around? What we're going to do as well, we're going to get rid of this center line as well. And I'm only really keeping this this trend here for, realistically, I wouldn't really keep this here. There's tools out there that plot this actually, like in the correct logarithmic way rather than just this arbitrary way that I've drawn it. They didn't used to exist, hence why I didn't use them in the past, but you can use one of these logarithmic growth channels in order to come up with your chart trending. So what are we going to say about this? Okay, we're going to use the horizontal ray here to try and come up with some key levels within what is this ranging time that we've got going on here. Now, the bodies of the candle is where the asset stopped trading for the day. And what we're going to want to look at is, so I find that the bodies of the candles are more important than the wicks, but if the two sort of intersect, clearly it gives more gravity to that being an important price point. So we can clearly see that the most important price really is this all-time high up here at 20,000. Now we're not going to need the chart, need that on the chart all the time. We're only at 10,000 at the moment, so I'm going to deem that as not relevant, or it obviously is relevant, but not necessary to be on the chart. However, down at 14,000, we have the highest monthly close here, which also, so the highest monthly close of 2017 was also the highest high of June 2019. So that's clearly an important point there. So with that, we're going to increase the thickness of the line. What we're going to do is we're going to put in here, and we're going to put monthly resistance. And that'll put over the side here. You can choose where that'll sit or what the colour of your line is or whatever. That's entirely up to the user's preference. So we've got a monthly resistance here. And what else can we say is important on this chart? Well, clearly the bottom of this range is also an important thing here. So we can just copy and paste and bring this down to these candles down here. So what we would say here is this is like monthly support. So we've got these two key price points here. The price is effectively traded within, give or take, the wicks, or 1 wick or 2 wicks, between December 2017 and September 2020. So this is quite a long period of time in this asset's history. and we know that we've clearly got a big support and resistance level that the price is going to be difficult to overcome. We can also see that the price is a lot closer to resistance than it is to support. So another price, and also we've got this logarithmic trend is moving to the upside. So it feels like we've got a triangle here, which price is sort of squeezing into before we might get that parabolic run. Now, what other areas of interest are there on here? Well, price was supported for ever such a long time here, and also here, by around about this 6,500 level. So this monthly level here, I mean, we could pull this all the way back, sort of to here, but let's just go off here. This is clearly another critical monthly support level. Now, what was previously support can also become resistance. What was previously resistance can become support. So, for example, here it acted as support, but there was no instance of it acting as resistance. It just clearly came through. We got support here again, and then it broke and we got resistance. Typically what you'll see is that an asset will eventually break out, and whatever was previously resistance will start to become support. So that's why that's going to be important. So is there any other lines on here which look like they might be important? Any other monthly levels which look important? Well, I'd say that this one also looks like really important as well. So back in April 18, I mean, it's also important in the basis it's not a million miles away from price here either. But in recent times, clearly price failed to get above this price level in April 18 and trended below it for such a long time, and then had a couple of months above it, and then thereafter it's really struggled to get above it. But actually, it looks as though it's getting above there now. And actually, so it took a few months here to get above it, having found support at this level, and now it's sort of pushing on and pressing on from there. So what this one's really, it's a monthly support and resistance level. At the moment, we don't know if it's really support yet. It hasn't come back and tested it at this sort of 9,200 level. But so really what I'm going to put it here is, this is monthly previous resistance, but we're going to say is it support? We don't know yet. In the support and resistance theory, we'd like to think that that's going to become support. So now we've got those lines, what can we say? Price couldn't get above here, and it couldn't get above it here either. We had all of this failure here for this level for a long time. We eventually broke above it. We had a lot of support at this level here, a brief wick to the downside, which we can almost ignore because that was actually a black swan event. I don't think I need to tell you what happened there. I think everybody's well aware of what occurred. We do have some other interesting price points like this one here, this monthly close. You might say, why haven't you included that? It's just not as important as the other things on the chart. So there's no real need to have it on there. So the big question now is, is this asset going to be able to, is it going to find support back here if it comes down here, and then eventually break through this resistance and find some support here, and effectively move on within our theory that we're moving in this direction? Or is this just totally wrong? And if it is wrong, where are we likely to go? Well, this 6,300 level of monthly support would look like it should hold up. There's many reasons why, none less than this parabolic trend here. And, worst case scenario, within this range, if we really are just going to go sideways forever now, it'd be reasonable to assume 3,000 is going to be an interesting price point, particularly because this wick here was just such a big rejection. I would suggest that's not likely to be where the price is heading. So now we've got the weekly there, the monthly levels on there. Remember, we're trying to get down to a decision like, can we invest sort of on the daily chart? And what we need to do now is look at the weekly Not going to spend forever doing all this stuff. And remember, we're going to delete some stuff out as we go here. So what can we say? In recent times, prices failed to get above this weekly level. So we've got a weekly resistance here. So I'm just going to put WR just for ease and just while I do this stuff, it'll help us get there quicker. So let's put a thinner line on here. So we've got this weekly resistance. What else have we got? Other areas of interesting resistance and support. We've got one, excuse me. I don't know why it's not copying for me, but we've got another very interesting level of support and of resistance up here, which price struggles to get across. Actually, you can see that this level here is very similar to what occurred over here. So the local weekly resistance looks like it could be defined by this kind of rejection candle over here from back in 2018. Price at the moment's just stuck, unable to get beyond there. Apart from, we had some wicks here, but we've effectively looked like we've suffered some rejection here. What else can we say? So for a long time, we were unable really to get beyond this weekly level as well. So for all of 2020, we failed to get across it. We eventually broke it, came up into the resistance, which was from way back when, and now we look as though we've bounced off the support here. Any other weekly points? Because there really we've only got a close weekly resistance and support. What happens if we lost that? Well, we know that we've got this monthly support here, but actually it's also a weekly support. We've got a lot of weekly support at this range. So if we just deep dive one more, can we find anywhere else that there's an area of support and resistance on the weekly? Well, here this was clearly a big bullish engulfing candle. We've got a lot of support around this price point here. We've got a lot of resistance at this level here. And then also it took quite a while to get over this level back at 7.6 back early in 2020. So I think that's an interesting level of weekly support as well. So now we've got a lot of lines on the chart. We're going to go down the daily chart. Notice, remember, we didn't include one of those lines earlier above. So the daily chart, what can we say? Similarly, we don't want to go back forever and ever, amen, on the day looking for daily support and resistance. Daily really should just be what's useful in the short term. Well, we've got this weekly support here. Well, actually, it's fair to say this is also daily support as well. Just put DS, just abbreviate it. Now, to be consistent, that was monthly support, resistance support, but it was also weekly support. That's obviously a critical price point. What else is going on? Well, we've got a local daily close, which has clearly resulted in this rejection. But actually, we can also see that it's supported price here and rejected price here. So this looks like it's an important price point as well. We've got daily resistance and support there. Now, one other thing to note is I've been bringing this 200 period moving average with me. So we've now gone from the weekly, where clearly it was supporting price here, here, and way back here and here. It was moving to the upside. But actually on the daily chart as well, it's also moving to the upside, but also it's at this key point here of monthly resistance support and weekly support. So what we can say is that this price point is probably going to be a critical part. If this move continues down, I think it's fair to say this is going to be a very, very important price point. So what we can say for the price today is, where do we want to buy this asset? Well, we know, I think we can remove this level up here. No need for that. We've got clearly weekly resistance there. We've got daily resistance and support, and we've got daily support here. So we're probably within this trading range here. Price is gravitating back to this sort of 10,000 psychological level, which was also, not only was it recent daily support, but it's also that weekly support and resistance level as well that we've talked about from the past. So what do we think is going to happen here? Well, is it a good time to buy? That's the question everyone wants to know. So how far are we away from this parabolic trend down here? Well, clearly the best time to buy was right down here in the 3 and 4,000s. So we missed that boat, unfortunately, in this example, and not necessarily in real life. But we've obviously had a rejection up at this weekly resistance and just below this major monthly resistance up here. I think I've just found where those lines I was copying have gone. Just delete some of this stuff out. You get a little bit OCD with your charts as time goes on, actually. So if we're going to try and make a decision, is it a good time to buy? Well, we're coming into daily support here, there's lots of wicks down here. And as we said, wicks are typically a good sign of a rejection in the market. So, there's other things going on in the world at the moment, so let's just ignore those for now. But what we might say here is the trend looks to be to the downside. Price generally gravitates back to key levels of resistance and weekly resistance and support. This isn't investment advice, by the way. It's just literally analysing the chart for what it is. So what we can say is we've got some support here, but there's a much better support level down here. So if you were going to buy into this market, or if you wanted to buy into this market because your viewpoint is that the price is going to be, way up here over time, then what you might say is that, we're not at a massive point of monthly resistance. We're not at 14,000, which we know has been troublesome to get across. We're not at 12,000 where we saw this rejection here. And also we're not at the bottom of that range, which is likely to act as resistance. Previous support there is clearly acted as resistance. So where are we? We're coming down to a near point of support. So one might be forgiven for investing or trading into the asset should it come down to the sort of the low 10,000 level. I think it would be reasonable for someone to think that might be a useful place to buy, but really it should also suggest that that's where price is likely to gravitate to. Once you see a rejection up here, price is likely to come back to the low 10,000s. Now, what's going to happen if we lose that 10,000? Well, we know that a loss of price at a key support level is likely to send you back to a previous key support level. So we know that this monthly resistance hasn't acted as support level yet, was also a key weekly support level back here. So there's also this 200-day moving average. So one might forgive someone for thinking that if price is going to fall down beyond the 10,000 level because it's been tested a lot here, it's likely to come back to 9,000. So what investment decision making does it also help with? Well, we know that if that level doesn't hold up, well, you might be looking at 7,600 or so, and beyond that, we've got that major monthly support level at 6,000. So I'm not an investment advisor. This is just an example, but as a trader, if I wanted to trade this on a low time frame, I'd probably look to buy around 10,000 because it's likely to come back and retest this trend. But at that point, I might be exiting the market with a view that it could potentially, come back, form a triangle here and fall lower into the 9,200s, where there's a much more supported level than this briefly supported level at 10,000 here, and a level which really didn't serve too well historically in the past. So I would probably think, okay, I might take a short-term view here, potentially re-adding if we break out of this trend to the downside. But while we're there, I think it might come back to 9,200. So I potentially wouldn't put too much money in here. I'd wait for this reaction at 9,200. A really patient investor may think that eventually, would do a lot of messing around here. They don't want to get involved, and they're just going to wait for a trend line test along here at some point, which would also be perfectly reasonable. Or they might be wanting to look at one of these more key levels of monthly support and resistance. But what we can tell from the history is, playing that game in a parabolic or a logarithmically growing asset is going to run out eventually. So, for example, if price was up here and you decided to buy this key monthly level down here, then great, off to the races. However, if price sort of gravitates up to here, which is arguably, the sort of place we are, we're about 50% of the retracement from the previous move. Let's say that we're currently in the previous cycle, so it went up to 1,000. It was at about $500 now. So let's say we're in this candle here, and we're trying to assess, should we wait for this key monthly level back here? Well, it never got back there. So, you need to bear in mind within this cycle, where are we? And if we think we're here, the likelihood is that, we've come up with our theory that this is a parabolic trend that we might be going into. Is it going to be a good idea to wait as an investor all of the way for it to come back to the bottom of here? Well, perhaps, but that is not our thesis here. Our thesis is that price is likely to be accelerating to the upside in the near term. So if we were to just, put that parabolic idea back on the chart, obviously, as I say, this is just an idea. And we go back down to the daily time frame. Well, what we can say now is we've got this conjecture of a really key 200-day moving average, very critical support and resistance level, and possibly the start of this parabolic trend here. So we're not too far away from where we think we should be in this asset. So an investor could be forgiven, or a trader might be forgiven for thinking this level might be useful. But we know that there's this room to the downside. Parabolic trends can be a little bit messy. And the economic climate at the moment is a little bit messy, to say the least. But one of these other two could also be visited. So I don't want to talk about strategy of investing or anything here. I'm merely just demonstrating how you might arrive at a decision making which might lead you to think that this sort of price level might be a good time to buy, whereas waiting for like the 3,000s based upon the history and everything that we've looked at might not be such a good idea. Obviously, this is just a Bitcoin chart. These techniques can be applied to any chart. Clearly this thing's just gone sideways here, and lots of assets just go sideways, particularly currency pairs. And there's lots of different time frames. You'll see lots of these different things occurring on, the 5-minute chart might just look exactly like this. Whereas obviously we're looking at the daily chart here, and so on. So hopefully that was useful to go through how you might construct a chart, how you might come to an idea around how you want to decide whether or not you do or don't want to buy an asset at a particular time. So let's go back to the PowerPoint. So we heard about Bitcoin. We were interested in buying it. We wanted to invest in it, and we've decided that we think that it might be nearly a good time to buy the asset. But in our example, we're going to sort of see what happens at 10,000. If it breaks out of that trend, then we might buy in a little bit higher and forego the opportunity cost of buying in potentially at 9,000 or maybe a little bit lower. So the recap here, what have we done? We've found the asset ticker. So we found Bitcoin. We determined a suitable time frame to assess the first assessment. So Obviously, Bitcoin's a 10-year-old asset. We found that the monthly chart was more useful than anything else. If it was the S&P 500 or the FTSE or something with a long history, you might want to even look at the 12-month chart or 12-month candlesticks. We decided that actually we needed to initially start with a logarithmic chart with Bitcoin due to the nature of the asset's rapid price appreciation within a relatively short period of time. We also looked at the overall directional bias of the asset, which was clearly upwards, but in this parabolic logarithmic trend. We decided that the asset was trending generally to the upside, but actually if you zoomed in on a weekly chart, daily chart, on a weekly chart and monthly chart, it's really going sideways at the moment. On a daily chart, it was actually coming backwards. So it's important to look at the context of the whole chart. We've already decided that it's that it's trending to the downside within a range on the daily chart. So it's coming back to that 10,000 level. We need to make a decision at that level. We've used some tools from the high time frame to the low time frame, and we used some trend lines, diagonal lines, horizontal arrays. We used a moving average, the 200 in that example. We looked at support and resistance briefly. We didn't talk about how to trade specifically, but we did talk about what areas of interest on the chart might be interesting for a trader and investor. Other indicators we'll look at a later date. And then finally, we cleaned up the chart as we went along and got rid of stuff that wasn't really that useful. So the next steps are practice, and more practice. I can't emphasize enough how important it is to just go, building charts. There's as many charts out there as you can possibly imagine. You can chart anything, go and chart the deaths on a COVID chart if you have to. All of these things are chartable. You can apply the same tips and tricks to all of these charts to try and assess, is there a trend in the market, and what direction is the market or the trend of whatever it is that you're looking at going, and you just start to see this stuff everywhere. You can, you pick up any sort of chart and you'll start to think that it looks a bit like a price chart, and you can start to see the trend as to where it might be going. Share your charts on TradingView. I can't stress how important that's been for a lot of people that I speak to in getting feedback, which has helped them determine how good their trading or their chart assessment is. Remember, we haven't talked really here about trading. We've just talked about assessing the future outcome of what a chart might or what an asset might do over time. So I really recommend sharing your charts with friends on Twitter, on TradingView or whatever. If people come and they say, hey, this is good stuff, if you get lots of likes and things, then great. I mean, don't let not getting too much feedback put you off. Just keep grinding with it. And, you've got that playback button. So post the chart. Don't just keep it to yourself. Put it out there. Put your neck on the line and let people come back and tell you, is it good or not? And you can always go and do what I just did there and press play, a few years, like 4 or 5 years later, and say, hey, I had a good strategy at the time there. Why would I change it? I'm only going to refine it, make it better. So the next thing we're going to do, not today, but we're going to do a second part here, which is we're going to start adding some indicators to the chart. So I haven't decided exactly how we're going to do that because there's just endless numbers of indicators and you can get into detail on those specific indicators. So I might split it up and do the indicators individually themselves in like a bite-size training, and then sort of put them on the chart and try and help determine, try and complement what we've already done here today. So hopefully you found that useful. Like it if you enjoyed it, subscribe to it, visit the Decent Trader website if you haven't already. There's a lot more content on there and you can find a lot more out about trading and learning from ourselves there. So thanks for joining, and I hope you found that of use.